good feeling. This place is jumping off hard as it can get. No, we won't ever stop dancing on the edge. We like it dangerous, we like to see you spit. Turn up another notch, you ain't seen nothing yet. Let me tell you something, let me tell you something. Let me tell you something, let me tell you something. Right now, right now. Right now, right now. Right now, right now. Right now, right now. Got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Yeah, I got a real good feeling. I won't hit no ceiling. Like there is lightning deep in my bones. Got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Got a real good feeling. Right now, right now. 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 Oh, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. Yeah, I got a real good feeling. Got a real good feeling. Like there is lightning deep in my bones. Yeah, I got a real good feeling. I won't hit no ceiling. I'm going higher than I've ever known. I got a real good feeling.
Hey guys, what's going on? Jebb here, and in today's live stream, guys, we have some breaking news coming from none other than your favorite Elon Musk and Michael Saylor. These two gentlemen have recently gotten together a plethora of CEOs in charge of different mining pools around the cryptocurrency space into one room to discuss moving Bitcoin mining to more green forms of electricity usage. This is a pretty big deal and brings up a lot of questions about centralization. We're going to be discussing all of that in today's live stream. A lot of you guys are concerned that this might mean that Bitcoin is moving towards centralization. This might mean that Elon Musk or Michael Saylor are trying to take over Bitcoin or something like that. I don't think that's true, but we are going to discuss all of that in today's live stream. We're joined as always by my co-host and your president, Kinda Crypto Tim. How you doing, Tim?
What's up, everybody? Through a loop for you.
Yeah.
Not wearing the hat. Here's the thing, though. When we are about to switch to Smay, you will see. Because shout out to Trevor Cross. He guessed it. I switched it last second.
Dang.
But you will see the hat I was wearing up until about 30 seconds ago.
For anyone watching the replay, they were taking bets on what hat Tim was wearing.
Yeah. No, first of all, to those who voted Under Armour hat, I don't have an Under Armour hat,
Yeah, that
so
was
you
rough.
automatically lost. At the moment, I have Hurley and Adidas, but I actually was looking at an Under Armour hat, so maybe you were being prophetic. I don't know. Maybe that's coming soon.
Yeah, there you go. Well, guys, we're also joined, as always, by our producer, the one and truly only Smangatang. How you doing,
Hi,
Smang?
everybody.
Make sure they get a good look at that.
Oh yeah. This is my new hat, guys.
He's got an Adidas hat. Adidas. Guys, we have some announcements before we jump into this. I want to go ahead and announce to you guys that we now have a TikTok. Yes, we jumped on the bandwagon. If you guys would like to follow us on TikTok, we're going to be posting over there quite frequently. We've already posted a couple of things over there. You can follow us at CryptoJebb Official. I believe that is in the description. If it's not, we will put that in there relatively soon. So make sure to go ahead and follow us over there. We're going to start posting a lot of content. You're going to see behind the scenes from me and my fellow hosts here in our office. We're having a new office that we're moving into in the next couple of months, so we're going to be posting some BTS footage of that. So make sure to go ahead and follow us over there. In other news, we actually just launched a newsletter for everyone who is interested in subscribing to our newsletter. I think you should, because we've been working very hard on it. This is something that's been in the works for the last several months, and it's now launching. That is going to be published every single Friday, pushed straight to your email. If you'd like to sign up for that, you can do so with a link in the description box down below. You're not required to own CT2A or be in CT2A. It has nothing to do with the Academy, but if you join the newsletter, then you're going to be getting access to some fantastic information and some updates from our team. So check that out. The link is down below. It is totally 100% free. Guys, let's jump onto my screen because we have an article that we need to kick off our stream today with. from a website eloquently named Forecast. And by the way, if Shannon, who is our marketing director, is watching this stream, he stole my mouse, and I'm having to use someone else's mouse. I don't know.
What did Shannon steal yesterday?
Yeah. Oh, yeah. Let's go to full screen real quick if we're not. Shannon, okay, listen. Shannon, who's our marketing director, who is in charge of making that newsletter, by the way, so subscribe to the newsletter, respond to the email, and come, bash him for it, stole my laptop. Walked into the office, couldn't find my laptop, and now I walk into the office and I can't find my mouse. Everything is going missing, and it is Shannon. Shout out to Shannon.
And you know what? Tim is going without a mouse today, so that the show can go on.
Yep.
So that's just another move.
That's just the sacrifices we have to make around here.
I'm a humble guy.
Yeah.
I do what it takes for the team to win. So.
Yes.
Well, there you go. Guys, we have an article that we want to jump into here over on Forecast. It says Marathon to host 73,000 Bitcoin miners in Texas as China exodus looms. Guys, we have a big story to talk about in today's video, and this is where it's going to start, so let's jump into this. This article published today starts like this. NASDAQ-listed Marathon Digital Holdings, one of the largest enterprise Bitcoin self-mining companies in North America, has announced a deal with Compute North to host around 73,000 of Bitcoin miners of Marathon's Bitcoin miners at a new 300 megawatt data center in Texas. 300 megawatts, there are power plants that generate 300 megawatts. That is a lot of power. Fast facts, Marathon's hash rate will be approximately 10.37 exahashes per second. The average mining cost will be that, and Marathon's operations will be approximately 70% carbon neutral when the miners are installed, according to a company statement. Real quick, before we move any farther in these fast facts, I want to show you over here on Glassnode the current mining power on Bitcoin. You can see that Glassnode here gives us data going up to roughly last week, and you can see the total network, if I'm not mistaken, is sitting roughly around 150 exahash. This is a big data center, and this is a lot of hashing power moving to Texas from China. Big deal, guys. Michael Saylor, CEO of MicroStrategy, tweeted earlier today that he hosted a meeting between Tesla founder Elon Musk and Bitcoin miners in North America. This is the crux of our story today. I'm going to read that tweet here in a second. To form a Bitcoin mining council that would improve energy usage, transparency, and pursue sustainability. A lot to break down there. One last thing before we move on is this. Last Friday, China's State Council announced that it was planning to crack down on Bitcoin mining and trading and resolutely prevent the transmission of individual risks to society. So, much to break down here, and it all starts with this tweet by Michael Saylor right here. He tweeted this yesterday. Yesterday, I was pleased to host a meeting between @Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form a Bitcoin mining council to promote energy usage, transparency, and accelerate sustainability initiatives worldwide. Let's go to full screen real quick and let's break this down. If you know anything about Bitcoin and the reason that Bitcoin is decentralized, this probably just raised some red flags for you. You might be seeing this and saying, council, Bitcoin, same sentence, problem. I had the same reaction when this was brought to my attention. This really brings up a positive and a negative, and we're going to dive a lot into the negative, but I want to encourage you guys that this is not as bad of a thing as I think a lot of people are reporting it to be. We simply can't make those assertions, but we're going to get there in a second. Number one, let's start with the good news. The good news is this is probably going to help with the public image that Bitcoin is bad for the environment. Now, I don't believe for a millisecond that Bitcoin is bad for the environment any more so than this camera or this computer or a toaster or your washing machine is bad for the environment. Quite frankly, I personally think it is a ridiculous assertion to attack Bitcoin for being anti-carbon or producing too much carbon and putting it into the atmosphere and causing climate change and everything. If you're going to make that assertion, then make that about all of modern society, just saying. But there are a lot of people that are not going to get into cryptocurrency because of that viewpoint. This is going to help them to feel a lot better about joining the cryptocurrency movement because of this, they are going to perceive that Bitcoin is at least trying to be more carbon neutral, which I think we can all agree is a fantastic thing to do. So that is one thing to keep in mind. But the more important thing here is this. What does a mining council mean for the decentralization of the Bitcoin network? As you guys know, Bitcoin miners have the power to initiate protocol changes. They're called Bitcoin improvement proposals on the Bitcoin network. You have to have a supermajority of miners to come together and agree to update the network. But having all of these miners in one council where they get in one room and they have one conversation every once in a while poses a threat. And it is that threat that we're going to discuss here in today's video. Tim, what are you thinking about this in chat? I'd love to hear your preliminary reactions to this, and we're going to dive deep into this in today's stream.
Yes, so a little insight into what happens with our team. Every single morning, I meet with our SEO specialist and our research specialist, and we discuss and we write a stream planning document to help give Jebb the best information he needs to be able to help you guys. Now, Jebb is obviously brilliant. He has his things. So some of this is actually, while he's read the document, some of this is actually, you're going to see him responding to some points that were made, which makes it nice and real and raw for you guys. But yeah, I switched hats again. I saw someone.
I know, I saw that.
Here is the thing. Whether or not you like this move between Saylor and Musk, whether you think it's the greatest thing in the world or you hate it, there are some questions that need to be asked. And so the majority of this stream, we're probably going to move through this and let Jebb really respond and go deep into answer. And I want to hear what you guys think as well. But these are the questions that need to be asked about the situation that will give us the best answer on, will this ultimately be a net gain for Bitcoin or a net loss for Bitcoin? So if there's nothing else that you have, Jebb, we can move right into those questions and go down them.
No, I think that's a fantastic idea, guys. So we have three main questions that we want to ask here, and we're going to be diving into all of these questions as we move through this story and break down what this means for you. The first question that we want to read here is this. What is the line between centralization and decentralization? You know, centralization versus decentralization is a concept that's talked about quite a bit in cryptocurrency. You might not actually know why it's important. Let me tell you why decentralization is so important, because it actually underpins the entire reason that miners exist in the first place. Let me put it this way. Visa processes 30,000 transactions per second, and pretty much all of those transactions go through one 500,000 square foot data center somewhere in America. I think it's in Texas. I don't remember where it is. Visa is centralized, and so they are able to process all of those transactions in one place for relatively cheap. Bitcoin, on the other hand, uses exorbitant amounts of power to process relatively few transactions. So you might be thinking, why in the world would I use Bitcoin that is incredibly energy inefficient? The amount of electricity that it takes to process one transaction on Visa versus the amount of energy it takes to process one transaction on Bitcoin is stark. There's a massive difference. Visa transactions are much, much cheaper, especially if you look at the computational effort that it takes to process those, running through all the data centers and the internet and everything. The reason that it is so inefficient, proof of work, is because it is the only way that we have found, other than proof of stake, and I'll get into proof of stake in another stream. I don't think that it is superior to proof of work in any way, shape, or form. It has a different use case. We've talked about that before, but keeping our eyes on proof of work is so inefficient, as people say, because it is the only way that cryptographers and programmers and developers have found in the history of humankind to create a decentralized, scarce commodity on the internet. Period. It's the only way it's ever been done. With blockchain technology, it has to be done through blockchain technology, and to keep it decentralized, it has to be spread out across the world, across a plethora of different miners. The way I explain decentralization to people is, let's say that Tim has a ledger of all transactions, I have a ledger of all transactions, Smay has a ledger of all transactions, and you have a ledger of all transactions. For a new transaction to get verified by the network, then all four of us have to agree that the transaction went through. That's why Bitcoin works. It is decentralized. Everyone has to agree that a new block is being added to the blockchain. It's simply the way this works. Now, the question that we have to ask is, what is the line between centralization and decentralization? Is a council coming together of major mining pools, which are just conglomerates of people that have other miners underneath them all come together to mine Bitcoin? Is that something that is a threat to Bitcoin, and is that true centralization? I don't think that it is true centralization in the same way that you might say the federal government is centralized. You got to look at it like this. Centralization and decentralization are a spectrum. You're either way over here and you're 100% decentralized and there's absolutely no central authority whatsoever. That, my friends, is physically impossible. It can never happen in a free world. It can never happen in a material world. It just isn't possible. There is naturally going to be centralization of miners over here in this country or over here in this country, and there's naturally going to be centralization of power over here in this person or in this person, and centralization of influence in this organization or this organization. It's naturally going to take place. It's part of human nature. We're going to get into human nature a little bit more in the future. So the question is, what is the line between centralization and decentralization? It's not a line, it's a spectrum. The question that we need to start answering then is, where on that spectrum do we want to fall? Is there ever a time where a little bit of centralization might actually be a beneficial thing? There have been many updates that have been trying to pass through Bitcoin ever since Bitcoin came about, and there's been all kinds of debate about it, and that's a fantastic thing. Centralization of these people coming together in some mining pools might at least give us some direction on where we ought to go to get information. The question is also, is that information good? here's my point, because I want to move on to our next point here. What is the line between centralization and decentralization? It's not a line, it is a spectrum. We want, ideally, to make sure that we keep ourselves as far over here in the decentralized area as possible. Centralization is not necessarily a bad thing, but we do want to try and stay away from it as much as we possibly can. Is there a limit to centralization that is acceptable? That's something that we need to discuss. Guys, I want to hear your thoughts on this in chat. What are your takes on what I just said? I'm sure what I just said is very unpopular amongst some people, but I want to see what's going on in chat before we move on here. What are you guys seeing?
Yeah,
in chat?
I don't know if I necessarily see too many questions on that. Because the thing is, like I said, that question is kind of loaded when we made it. There's a couple questions we need to ask underneath that, obviously. And so while we're waiting maybe for people to type in their questions, the next question we need to ask, because while you talked about the difference between centralization and decentralization, a good question is there actually ever a time that a slight bit of centralization is needed?
Yeah.
Do you have an answer for that?
Yeah, no. So that's the thing that. So, and this is going to tie into a next point. The next point that we want to make is, I personally believe that centralization is human nature and inevitable. The question is, how much of that are we going to be able to hold off against, and how bad is that truly? We want to dive into this philosophically, because it's very important when we start seeing things like Michael Saylor and Elon Musk, two big power players in the cryptocurrency space that came out of nowhere because they decided that, oh, I'm rich, I'm going to talk about Bitcoin. That we have to take this into account. Is there a time where a slight bit of centralization is needed? Absolutely. Not a popular opinion. Yes, absolutely there is. The thing is, Bitcoin, through its own design of decentralization, has conquered that need in 99% of cases. Is there a need for central authority over Bitcoin? No, there actually isn't. The reason is because it was designed in such a way that it is able to be self-governed in a fully democratic manner. Is there ever a time where centralization is needed in general? Yes, absolutely. I'm not an anarchist. There needs to be there need to be governments, Bitcoin was designed to be operated by the laws of economics. It doesn't need to be centralized. Most things in our world do. Is centralization inevitable is the real question. I think actually yes. I think it's human nature for us to come together under central authorities. It is simply human nature for power structures to emerge where one person or one group of people rules. In fact, I was telling Tim this on the way to work while we were talking about the stream planning document. I think it is a marvel of modern society that democracies exist in the first place. It is completely contrary to the natural greed of humans to spread out power amongst people. That is incredible. It's not something that you see very often in history. And normally when it shows up in history, it doesn't last very long. And what we've seen in the last 12 years on Bitcoin is we have this democratic society of people that are mining Bitcoin and all coming together and having to agree on Bitcoin improvement proposals. So the question is, how long does that last? Is that centralization completely inevitable? I'm leaning in the camp of yes, I think it actually is. But how far we let that go ultimately, and we're going to move into this point a little bit later, comes down to us as an educated citizenry of cryptocurrency. So I want to make that point here in a second.
So people have been commenting in here. I love where people are coming at, because I'm in the same boat as a lot of you, and you'll see here in a little bit when we go through these questions. But I see some people, like, for example, here's a question right here. Not a question, statement. Someone saying, I think if Saylor and Musk hold mining centers, they can govern against threats. I mean, that's a thought. There's a difference between centralization and coordination between allies or members of a coalition.
Yep.
Coalition. That's the point, and I think it's a good way to frame it. I'm kind of sitting in the same boat with I think Jonathan Allen said that. Kind of sitting in the same boat. Jonathan Allen, that's the name of I think actually a couple really good football players.
Allen, yeah.
I don't know if that's the same one.
Yeah.
But we're gonna keep moving on because these questions are good. There was a couple questions asked in chat that I copy and pasted. I thought these were good. Rick Hamlers asked, who actually makes regulation rules when miners come to America, and do states have different rules? How bad can these rules be for them? So, for example, I saw people talking about in chat, Kentucky looks like a very pro-mining state. Mm-hmm. How does that look versus maybe California or New York or Florida? Or do you know anything about that, or do you know what those regulations would look like?
I don't know about the individual state regulations, but there are, like you said, some states that are very pro-Bitcoin mining. I think not Oregon, was it Oregon or Wyoming or Montana? Montana, I know, is very pro-Bitcoin mining. There was an article that came out a little over a year ago on that. There are a lot of states that are very pro-Bitcoin mining where there is actually very cheap electricity, some of them being down in the Southwest where there's a lot of solar power, so that's a good thing. Mm-hmm. But someone said something in chat that I think leads us very well into our next points. Someone said, Stanley said, direct democracies have always failed because people are ignorant and fickle. I completely agree. This is historical fact, actually. That's not even disputable that democracies fail. Now, why they fail, that's all up for debate, but democracies in history almost always crumble. Why? The reason that a democracy succeeds in the first place is because the citizenry of that nation stays informed and is able to hold that central authority accountable. Where you get totalitarian regimes is when the populace, the citizenry, stop fighting that. It is the natural tendency of any governing body to move towards taking more and more power. That is simply human nature. Remember, guys, governments are just made up of humans. Human nature is to try and grab more power, so naturally governments are going to do the same. This leads me into my second point about, was this meeting actually a move to centralization? I don't think so. But one of the big points I want to make even before we move there is this. We need to look at Bitcoin and the mining of Bitcoin very similar to the way we look at nation states right now. We need to look at it the same way we look at the United States or the European Union, which I know is not a country, but is an organization of nations. These nations, if you will, have people that vote and are supposed to use that democratic freedom to hold their authorities accountable. What we're starting to see show up are different little glimpses of what might in the future turn into some kind of governing body of Bitcoin. Do I want that? Absolutely not. I don't think it's necessary, but it is human nature, so it's something that we need to have on our radar. It is our job as citizens of this Bitcoin nation, if you will, to make sure that we are informed, to make sure that we are educated, and to make sure that our voices are being heard, and, by the way, to make sure that we're mining, because mining is our form of voting. And I'll be honest with you, I don't mind Bitcoin, so I'm a complete hypocrite when I say that, but in light of this, I think that might change. We're going to look into it. But at the end of the day, the mining of Bitcoin is how your voice is heard. And the thing that you have to keep in mind about any kind of council like this that comes together, no matter what power they have, which right now they have zero. I do not want to give this more attention as far as that is concerned than it is required. This is not a threat to Bitcoin. This is not a governing body. This is not any of that. We're speaking in hypotheticals here. It is our job to make sure that we're informed, because the people sitting around that table are only sitting around that table because they have people mining in their pools. They're essentially customers. They are only there because they are successful capitalists. Mining pools are only supported by the people that choose to use that mining pool. They have no direct authority, and that's one thing we need to keep in mind also, is that any kind of governing body that might come into play over Bitcoin that is based on miners doesn't have an iron rod. Nation states rule with an iron rod. If you don't pay your taxes, you're going to jail. No governing body in Bitcoin that is based on miners can do that, so it's not something that I think we ought to worry about. I do think the human tendency to move in that direction is real, though, and it is our job to make sure that we are staying informed. With that said, I want to dispel any confusion about what Michael Saylor is talking about. Was this actually a move to centralization is our second question, and it's a very important one, because we can talk all day about the philosophy of democracies and all of this, that, and the third, but at the end of the day, what is really happening here? I don't necessarily think is a move towards centralization. I think it is a red flag that we should be paying attention to. I want to hear your thoughts on this in the chat, and I want to see what you guys are saying. I don't think that this is a move towards centralization. I want to hear chat for a second, then we're going to read a couple of articles, and we're going to continue. What are we seeing over there, Tim?
Yeah, I mean, I think there's a lot of people that probably agree with your opinion you just gave. I'm looking, even as you want, you can look here. There's a couple different thoughts going in chat. First of all, Mao, there's someone talking about if we were to have a documentary in the future or a movie in the future about crypto and we're involved, who the actors would be. That was pretty humorous.
That's funny.
Smays was pretty good.
Yeah,
Smays was good. But, oh my gosh, Morgan Freeman is Smay. All right, sorry.
That's great.
I digress. That's not really that important.
Though I'm The Rock, okay.
So... Luckman Akhmat, I think I'm saying that right, says mass adoption cannot happen without a degree of centralization. It will not be black and white ever. Education is key.
Exactly.
Great show, guys. That is a great.
Yep.
We're going to talk even more and more about that as the show goes on. But that is a great point. That's what we were getting at. Was like, is there ever actually a place? Could we actually ever be completely 100% decentralized? And I think the answer is kind of no.
Yeah, it is.
But that being said, which is one of mine that I still had like 9 left.
Yeah.
Is that even what was happening here? And so I'm not seeing necessarily too much. I think we can go ahead and start answering that question, Jebb. Are we actually seeing centralization happening from the camp, or what is happening instead?
Yeah, so guys, here's what we know. We know that Michael Saylor came out and said, yesterday I was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form a Bitcoin mining council and to promote energy usage transparency and accelerate sustainability initiatives worldwide. First of all, as far as I'm aware, and I might be wrong on this, Tim, correct me because you're more involved with the writing of the show. I don't think that those miners represent over 50% of mining power.
Definitely not.
I'm pretty certain
Not even
that
close.
exactly. That's what I thought. It's probably less than 10%.
Yeah.
So you got to realize any kind of governing body that would be over Bitcoin is one that is elected by the miners by the very nature of how Bitcoin is constructed. And it's not just a majority vote, by the way. To pass an update on Bitcoin, you don't just need 51% of the miners to agree. You need like 80, 90% of the miners to agree. You need a super, super majority to get anything passed. So the idea that a governing council might come together and start saying, oh, we're making this update, we're making this update, we're going to change the block size, we're going to change the block reward and the difficulty, and it's just not going to happen. It's something that is extremely unlikely to happen. Now, the idea of having some kind of governing body come together and start saying, okay, this is what we think, and this is what we think, and then people listening to them, that's another thing. We've already seen that happen. A lot of people go to Elon Musk. A lot of people go to Michael Saylor and say, oh, what does he think? And then they listen to him. That is the kind of thing that we're talking about here. We're not talking about a governing body that can say, we mandate this, and then it happens. They simply cannot have that authority because of the way Bitcoin was created. It was created that way for a reason, and we're very glad that it was. Was this a meeting to force miners to change, or simply to show that renewable energy was more feasible than popularly thought? Many people are making this story out to be something that it's not. It is not the beginning of the Soviet Union of Bitcoin. Like, it's not doomsday authoritarian government apocalypse mode. It's really just a bunch of people getting together in a room to talk about Bitcoin being more sustainable. One thing I want you to keep in mind is that, yes, this could be one step towards some kind of centralization. However, this I don't think is that. I really don't think this is a threat. Was this meeting actually a move towards centralization? No, I don't think it was. But you know what I think it was a move towards? I think it was a move towards making people that are scared of Bitcoin's electricity consumption and environmental impact more interested in coming to cryptocurrency. In my opinion, I actually think this is a very beneficial thing for Bitcoin, because these people coming together, coming up with some kind of saying like, hey, we're going to help, we're going to incentivize at this mining pool and this mining pool, and we're going to come up with ideas. I don't think this was a bad thing. I think this is essentially more like a think tank than a government, and I don't think that we should make this look to be something that is not for the sake of sensationalization, which is happening a lot in cryptocurrency lately, and we do not want to be the channel that promotes that. So the question is, was this actually a move towards centralization? I personally don't think so. I think this is actually a very good thing, and I don't think it's something that we should be terribly concerned about.
And that's the thing that we need to see in the next couple of days. First of all, people are freaking out over a tweet, a simple tweet.
Yep.
We actually don't know the full details of what was discussed in the meeting. If it was bad, and if it was a let's see how we can take over Bitcoin and take control, then yes, let's respond negatively then. But ultimately, if we're just going to go based off what the tweet says, it actually implies this has no control in it whatsoever.
Yep.
But rather, it's simply a way for American miners who are using renewable energy to showcase to the rest of the world, hey, we are using renewable energy and it works and it's effective. Here's how you can do it. They're going to release their information so that other people can see it. If anything, that's being vulnerable. That's being that's allowing people to have accountability over them so that we see what is happening there. So I'm not saying that there aren't people in this world that want centralization in Bitcoin.
Yep.
What I'm saying is to freak out over this tweet and this particular circumstance, I think is a little bit premature. Now, again, let's wait a couple days, see what happens, because I am sure that the news is going to be all over this. I know with what's happening right now with CoinDesk. What's that thing called that CoinDesk is doing right now? Consensus.
Yep.
Consensus is happening right now. Michael Saylor is there. A bunch of other big names in crypto and Bitcoin are there. I am sure that they are not going to let him escape without answering some more questions about this meeting. So let's give it a couple days before we just start running for the hills and say Bitcoin is now centralized.
Yeah, and so guys, there's really two more questions that we need to ask here. Number one, do the parties involved want to centralize Bitcoin? And the more important question, which is at the core of this, is can they? Because whether or not they want to really hinges on if the answer to that question is yes. First things first, both Michael Saylor and Elon Musk have talked in the past about their disdain for projects being centralization. This is a fact. They've come out and said that. That is something that we know that they have said. Now, of course, people change their minds. They're humans just like I and you. So maybe that's changed. We don't have any evidence of that, though. The more important question here is, can they try to take control of Bitcoin? Are they intending to do it? We have no evidence that they are. But the more important question is, can they? Because whether or not they want to, I guarantee you there's someone out there right now that might want to try and take control of Bitcoin. There are people out there that want to be in charge of it. Obviously, it's $1 trillion network. They want to be in power. So the real question is, can they take that power? They have no option to do that. The real power that we have given Elon Musk and Michael Saylor is just that. It is given. A lot of people listen to Elon Musk. Obviously, when he sent out a tweet saying that he wasn't liking Bitcoin anymore because of electricity consumption, Bitcoin dropped $10,000 in 24 hours. The only power they have is the power that our people, that we have given them. Everybody wants to know what Elon Musk is saying. Everybody wants to know what Elon Musk thinks. Everybody keeps saying, oh, Elon Musk says this, Elon Musk says that, I'm going to go do this or that trade. We have given them power. They only have that power so long as we have it. And by the way, that power is only the power to shape public opinion. It is not power to change Bitcoin in any intrinsic way. Yes, influential people can have opinions.
Yeah.
That's the modern world. I mean, that's how the internet works, is that you can go out there and you can have an opinion and you can tell the whole world about it. That's just a fact of life, and that's not going anywhere, just so you know. But the fact of the matter is that they can have all the opinions they want. They can't do anything to fundamentally and intrinsically change Bitcoin. Bitcoin is a network that is so democratic, it's not even funny. It's one of the most, I've said this before, it's one of the most democratic things that we've ever created in the history of mankind. You need like an 80% supermajority to pass anything. And those people have to be miners that have economic investment. It doesn't cost you a dime to vote in an American election. It costs you money to go out and vote in Bitcoin. There's an economic incentive to keep the network decentralized, by the way. In case you didn't realize that, the miners that would vote for anything centralized are threatening their business of mining. And that's why you might be saying, oh, Jebb, isn't that a poll tax? No, what I'm saying is that there is an economic incentive to keep the network decentralized because the people mining the network rely on that decentralization to make those votes in the first place. So they're not going to move in that direction. There is simply no way, short of having the entire world come together and try and attack Bitcoin, to move Bitcoin in any way, shape, or form towards decentralization, or excuse me, towards centralization, as far as the programming of the cryptocurrency itself is concerned. Guys, Bitcoin is a very hard nut to crack. There are ways to crack it, but it's incredibly difficult. It's never been done, and it is not something that I think that we should be concerned about. This is not the end of Bitcoin. Yeah. This is simply some guys getting in a room talking about whether or not we can make it a little bit greener. That's my take on it.
Yeah, I mean, and so going straight to the notes that I wrote this morning. Here's the other thing: is I know it's frustrating. Trust, I've been frustrated when it seems like every single day it's Elon this, Elon that, Elon this, Elon that, and it's like, oh my gosh, like, can we just get a freaking break? So I saw someone comment in chat. They're like, hey, the way we end this is just they're not talking about him. It's not necessarily true, because at the end of the day, if we all came together in the entire world and said, we're going to stop talking about Elon, then yes, then that would happen. That's not going to happen. The reason we're talking about him today is exactly the point we're about to make. Listen, it does you no good to be mad at Elon.
Yep.
And the truth is, to be mad at Elon and to say things like Elon needs to sell his Bitcoin, or to say, Elon, shut up, is that not centralization itself by saying you're too influential, you're too big of a person to have a voice?
Yep.
That's just as negative as him telling you have no voice. So ultimately, what we're really mad at them about is being very rich and powerful and giving their opinions, where we want to voice our opinions all over the place. The problem isn't Elon or Michael giving their opinion. The problem is the lack of education in the individual to just blindly follow it like a sheep rather than learn how to think for themselves.
Yep.
And that's ultimately why this YouTube channel exists. It's not so that you come on and just listen to every word Jebb says. By the way, like, as much as I follow Jebb and I listen to him and I ask him questions about technical analysis all the time, I don't just follow his trades. I don't just tell him, Jebb, what trade are you making? I want to make the same trade. Hey, Jebb, what are you investing? I want to make the same investment. I don't actually, more so than wanting to hear what he's doing, I want to hear why he's doing it and what are his thoughts going into it so that I can begin to develop my thoughts on it. And same thing, my brother comes in, he says, Tim, what trades are you making? I want to make the same trades. I literally said, don't do that. Learn to think like me. Learn to think like Jebb. Learn to think like any person you aspire to and you see and you think they're intelligent. Learn to think like them. Don't just copy them. Same thing with Elon and Michael. Very influential people. The truth is they're brilliant, so you could learn a thing or two from them because they have both made a massive name for themselves. But don't just follow them with this blind, whatever they say I'm going to go with. Learn to think, learn to educate, and that way you can hold them accountable. That's why, even though I might disagree with a lot of the posts on Twitter that are backlash against the tweet that went out, at least these are people who have done a lot of research and thinking for themselves, that they are giving their opinion against Elon and against Saylor.
Yep.
So whether I agree or disagree with them, I agree with the sentiment that you should think for yourself. And if you disagree with someone, it doesn't matter how powerful they are, you deserve the right to disagree with them and to voice your thought.
Yeah, guys, to wrap out this segment, think about cryptocurrency as a nation, a democratic nation. We are the citizenry. We have a vote through our mining and through our words. It is our job, in the same way that it's our job to be an educated citizenry of our country, of our nation, it is just as much our job to be educated citizens of cryptocurrency so that we can hold any authorities that might come about accountable to that authority that they may have, which, by the way, they don't. With that said, we're going to move on to some Bitcoin technical analysis. We have a couple of patterns forming here, and then we have some big news coming out of Ray Dalio that we're going to talk about here in a second. So let's go ahead and jump on to my chart. Guys, Bitcoin has been in a strong downtrend over the last 10 days. We pulled all the way back from $58,000 with this red level of resistance right here, this downtrending level of resistance, which we broke bullish out of yesterday. We had a conversation on stream yesterday about whether or not this movement right here was simply a bull trap, and I was somewhat inclined to believe that it was, and I'll show you why. We can see that I have a zone drawn between $40,500 and $39,000. That comes from a couple of moving averages that have now updated but are still roughly the same place that they were. The top of this is represented by the 200 daily simple moving average, which is right here. If you guys know anything about the history of Bitcoin technical analysis, you'll know that this is a moving average that is generally held during bull markets and is normally broken during the beginning of bear markets. We are currently below that. So that's the top of our resistance zone. Out on the weekly chart, we also have a level of resistance at the 34 exponential moving average, which is sitting right around that level at $39,000. So that's where I'm getting that zone of resistance. We're currently rejecting from that zone of resistance. This is something that I had a feeling was going to happen yesterday. Tim, we had a conversation about this. You were talking about entering a trade up here. Yeah. I said, no, you probably don't want to. Let me show you what he was talking about. He was saying, what if we entered a trade right around here? And I said, yeah, but Tim, the thing is the RSI, and not to throw Tim under the bus, it was a good idea. It was a good idea for a longer term trade. Maybe not so much for this shorter term trade. We saw that the RSI was pretty high right here. We'd want to get a good deal whenever we're entering a trade. We want to buy in with low RSI, and in this case, the RSI was not very low. We had a strong level of, or in this case, a strong zone of resistance right above us, sitting around $40,000. Also, keep in mind, $40,000 is a mass psychological level of resistance. If you guys are in the Cryptocurrency Technical Analysis Academy, you will know the idea of psychological levels of zone and resistance, of psychological levels of support and resistance in this video on mass psychology right here. So we rejected from this. What this now looks like we're forming is an inverse head and shoulders pattern with a shoulder right here, a head right here, and a shoulder right here. And it actually makes a lot of sense that this would happen. We had our left shoulder form, we had our head form, and then I talked about yesterday that there would, I didn't say this on stream, I said this off stream, I was talking to Tim about this, that we're probably going to reject from $40,000. We were probably going to pull down to this red level of support and resistance, and we were probably going to bounce from it. With that said, that is what has now happened. I want to take a look at the daily chart, though, because there's some things that we want to look at out here. Namely, we can see that the MACD is starting to converge on itself in a big way, especially the last 2 days. We've seen major convergence of the MACD line and the signal line. The histogram is narrowing, and that means that we're looking forward to a cross on the MACD, which could lead us to moving to the upside. We saw that color change back on the 19th, which is a very good thing indeed. The question now that a lot of people are wondering is, did Bitcoin bottom out? Is 24 low enough on the RSI, and is Bitcoin going to rally from here? I think the answer is a solid maybe. I know that's not the answer you wanted. It's a definite
solid maybe.
It's a definite maybe. As my dad used to say, it's a definite maybe. It is a definite maybe.
Is that not the definition of an oxymoronic statement?
Yes.
Yeah.
It's a jumbo shrimp statement, if you will.
Oh my God.
Here's the thing, guys. Bitcoin has had a massive crash. The entire market has been shaken up. What we just did is we just took the chessboard and we just did this. That's what we did. And now what we're doing is we're holding the chessboard, trying to let the pieces fall. And what we're trying to do is we're trying to make sure we let them fall in the right place. You have no impact over gravity. They're going to fall where they may. The problem is, because they're going to fall where they may, we don't know where they're going to fall. The chips are still in the air right now because we've had a gigantic crash. We don't know where the chips are going to fall. We don't know where the pieces are going to fall. They're still in the process of falling. When they're done falling and rolling around on the floor, then we can start saying, okay, I need to pick this piece up and I need to move it over here. I need to pick this piece up and I need to move it over here to get the chessboard back to where it was. Right now, the pieces are still in midair. It's very difficult to make predictions right now, but what I can tell you is this. We have strong resistance overhead. It's the $40,000 level of resistance. What I can tell you is this. Volume is very high. Even though we're very low, volume being very high I think is a good thing because it means that there's a lot of money changing hands right now, and that money changing hands has not caused Bitcoin to go back down to 30,000. We've equalized around 40K, which means we might be building a floor down here, meaning that 4-hourly chart inverse head and shoulders pattern I just showed you might mean that we're about to go into a bigger rally. These are all maybes, but they're things to keep in mind. TD sequential is also just now reset. We had a 9 flash on TD sequential that said that we were getting overextended to the downside, that we needed to bounce. That has now taken place. TD sequential is almost always followed. It's an indicator you don't want to ignore, and it is being very clear right now. We also know that there is strong support down here at $30,000, especially since we tested it again. That is shown based on our test, but also on levels over here. VPVR has a ton of support in this zone between $30,000 and $40,000 as was built over here. All of this to say, yes, Bitcoin is in a correction. Yes, Bitcoin pulled back to $30,000. Is this the end of Bitcoin? No, obviously. Is this the end of this bull market? Is this the end of this bull market? I don't think so. And is this the end of this correction? I think it might actually be. Like I said, I can't tell you that for sure yet. The pieces are still in midair. But what pieces have landed are telling us that we may have set the bottom at $30,000. It's going to take a few more days for us to have that opinion solid, so be careful about entering a lot of trades right now. We're in very tumultuous waters, but it is something to keep in mind. Anyway, guys, let's go back to full screen. Let's discuss that for a second, and we're going to move on to some news stories coming from Ray Dalio, billionaire investor turned Bitcoin maximalist. Let's see what chat's doing.
Yeah, I mean, people are definitely talking about the definite maybe. Yeah,
that's a definite maybe.
World of crypto. Somebody even pointed out that's like the crypto YouTube thing, like the definite maybe.
It's a definite maybe, yeah. No, look, guys, a lot of times I can give you a pretty solid opinion on something. Right now, I'm not going to lie to you and tell you something that I can't actually read. If I can't find anything in the charts, I'm not going to try and make something up because that would breach our integrity core value. So I told you what I can tell you.
Yeah, yep.
And that's important.
And the thing is, I mean, someone mentioned it earlier, and Jebb and I were talking about this earlier. This could be an inverse head and shoulders pattern forming. It has not reached the point where it's confirmed or denied that's what it is. So, I would like to think, the optimist that I am, and also if I'm going to win Friday's price prediction, that this is an inverse head and shoulder pattern. But someone asked earlier, and I responded to them. They said, "Is this?" They were looking at it. They're like, "Hey, are we seeing this W? Are we seeing this inverse head and shoulder?"
Yep.
And the temptation to say what you guys want to hear, which is most of you want to hear, this is an inverse head and shoulders pattern, is very strong.
Yep.
And I want to be like, yeah, no, this is actually happening. The reason Jebb said definitely maybe is because he's not saying no, that's not happening, but he also doesn't want to give you any false hope if that isn't what's happening and it ends up falling out and we end up dropping back down to, I don't know, 30, maybe even lower. He doesn't want you to make any move just yet without knowing a little bit more. And yes, I think a temptation has come into my mind before, Jebb, and I'm sure some of you guys have had the same temptation, is to think, oh no, but if I wait too long, I won't make as good of a profit. So if I don't hit the bottom just right, I'll end up losing money.
Yep.
And here's the thing. It's better to make a little money than to lose a lot of money. And I think a lot of people go into places like this on the Bitcoin chart thinking, how do I make a lot of money? And they end up losing a lot of money.
Yep.
So that's what I want to say. I don't know how many of you guys are kind of seeing that boat. Jebb has probably been in that boat himself.
I've been there a billion times. Here's the thing, guys. It's about risk to reward ratios. If you're in the Cryptocurrency Technical Analysis Academy, somebody, let me show them real quick because I got to show them this. It's important. In our technical analysis section over here, the very first video that we talk about is risk to reward ratios. Everything we do in technical analysis, everything we do in trading is built on the back of that. Let's go back to full screen. Here's the thing. What a risk to reward ratio is very simple. It's hard to calculate because it's not something that you can nail down, but the idea behind a risk to reward ratio is very simple. How much risk are you taking? And make that a ratio in a conglomerate of your reward. How much are you standing to gain versus how much are you standing to lose? What is the risk versus what is the potential risk versus what is the potential reward? It's a game of statistics and probabilities. There's no certainties, and that's why I can't tell you for certain anything, but I can give you with a certain probability something. I want to watch that again. That's important. What's the upside right now? A lot. The upside right now is a whole lot. Bitcoin doubling back to all-time high. So yes, the reward is there. Here's the risk, though. The market just became very tumultuous. There's a lot of risk that you might have a big crash. And by the way, I'm not talking to the people that are buying now and holding for a year. I think you should definitely buy right now. Don't worry about trying to time the market if you're trying to buy the market and hold for 12 months. You're almost certainly going to be in profit. I'm talking to the people that are thinking about making a trade right now and going to stay in that trade for less than 7 days.
Yeah.
There is so much risk to that right now because we simply have no idea what the market is going to do next. I can show you basic volume analysis, TD sequential, zones of support and resistance, VPVR, RSI. I can show you some of that stuff, but a lot of that is still in the process of being formulated. So I've already made that point. I don't want to make it again, but here's the thing. You just have to be informed and educated. It all comes back down to that. And guys, that is why we created the Cryptocurrency Technical Analysis Academy. If you'd like to learn more about technical analysis so that you can go and you can read these markets, not just Bitcoin, not just Ethereum, but all the cryptocurrency markets, even stock markets, forex markets, precious metal markets, oil markets, etc. If you want to learn technical analysis so you can learn how to read these markets, I encourage you to sign up for the Cryptocurrency Technical Analysis Academy with the link in the description box down below. And by the way, if you guys haven't already, make sure to smash that like button and subscribe to the channel because this channel is all about bringing you honest information that is at the intersection of what you want to know and what you actually need to know. And we don't pull punches just because we think it's going to make us popular. I'm going to tell you what you need to hear, even if it's not something that you might want to hear. Sometimes it's a little uncomfortable, but that's my job to be a good steward of the position that I've been given by the Lord. So guys, let's see what chat is saying about that for just a second. Then we're going to move on because we have some more stuff to talk about here. Let's see. Is there anything big in chat, or can I move on here?
Yeah, I want to answer this guy's question real quick because he seems to be really enamored with the fact that we're able to switch cameras.
Oh, I saw that. I saw that.
I'm gonna show you guys real quick. All right, I'm gonna see if I can do this.
Hey.
This right here is called a switcher. That lets me switch between the cameras that we have, so I can just do boop, boop, boop. There you go. Now you know.
Live production for you, fellas. Good deal.
Hopefully we'll have a bigger board like that very soon.
Yeah, no, guys, wink, wink, nudge, nudge. We might be moving into a new office pretty soon. We were touring yesterday. Wink, wink, nudge, nudge. Yes, I will be on Around the Blockchain tonight, by the way, for everyone asking. Let's go ahead and jump onto my screen. We're going to read a couple articles, make some couple of points, and we're going to wrap it out. I'd rather Bitcoin over bonds, says Ray Dalio. If you don't know who Ray Dalio is, he's an author, he's a billionaire, he's a very wealthy man, and a very intelligent man. And he is now a big fan of Bitcoin. Billionaire investor and famed hedge fund manager Ray Dalio has stated he would prefer to purchase Bitcoin over bonds during a recent interview at crypto conference Consensus. I don't see why you would want to purchase bonds over Bitcoin unless you have a gigantic concern about risk. So I think this is a pretty obvious statement, but it's good to hear someone with influence like him saying this. Speaking on May the 6th in an interview that was aired on Monday, May 24th, the co-chairman and co-CIO of Bridgewater Associates, very prestigious organization, described Bitcoin as a superior instrument for saving, than government or corporate bonds. The more we create savings in Bitcoin, the more you might say, I'd rather have Bitcoin than a bond. Personally, I would rather have Bitcoin than a bond. And I think he's absolutely onto something here, guys. It's pretty simple. Bonds are going to bring you interest based on what the prime interest rate is as set by the Federal Reserve. You're going to make a certain amount of money on them, but the problem with that is that you're going to be fighting inflation and not much else. With Bitcoin, you're expecting not only to fight inflation, but also ride a massive hype train of people getting in on a new technology that is growing very quickly. I think it's obvious for everyone in cryptocurrency why you would want to be in Bitcoin over bonds if you understand how bonds work and if you understand how Bitcoin works. The point here is that Ray Dalio came out and said it, and it's something that we're very excited about. One point he does make that I want to bring to your attention is this. The billionaire hedge fund manager admitted that holding Bitcoin in March after again predicting that U.S. attempts may try to ban it. Dalio noted that the United States had attempted to prohibit U.S. citizens from owning or trading gold in the 1930s, which absolutely happened, as it was seen to be a competitive threat to treasury bonds. In January, Dalio warned of increasing regulatory pressure targeting digital assets amid the crypto's impressive bull run, writing, I suspect that Bitcoin's biggest risk is being successful, because if it's successful, the government will try and take it out, and they have a lot of power to succeed in doing so. I have been saying this from day one when I got into cryptocurrency. Bitcoin is a gigantic threat to the hegemony of our governments, because one of the ways that they maintain their power is through their maintenance of the power over the currency. This is something that we need to keep in mind. As Bitcoin becomes more successful, it becomes a bigger threat. Have you ever wondered why Satoshi Nakamoto, who has a million Bitcoin, is still anonymous when he's worth, he, she, them, whoever created Bitcoin is worth like so many billions of dollars right now, $39 billion right now. Have you ever wondered why they stay anonymous? Number one is because they don't want everyone in Bitcoin to be looking to a central authority. Of course, it's an ideological reason, but it's also because the CIA would probably find them and take them out because they know that it's a threat to the U.S. Federal Reserve. It's a real thing. Now, is it probably going to happen? Maybe. Is it going to happen? Maybe. Is it something that we should be worried about? I don't think so. Because if the federal government does attempt to ban Bitcoin, it is not something that will succeed. Bitcoin is naturally decentralized, and it naturally exudes decentralization, and it's very difficult to try and centralize it, which is what we were talking about earlier. Ray Dalio here, by the way, in case you want to throw shade at Ray Dalio, he is not saying he supports that. He actually loves Bitcoin, as you can see earlier in the article. But it is something for us to keep on our radar. As Bitcoin becomes more successful, we should be expecting more regulatory oversight on Bitcoin and more concern about Bitcoin's success. We've started to see that show up with concerns about, its hash rate and its electrical consumption and all kinds of other things that people throw at it. None of it sticks, but we do want to keep that on our radar. So, guys, let's see what chat is saying about that. And any final...
I don't know if too many people necessarily respond. I mean, okay, so people are definitely talking about bonds, and people... just echoing the sentiment of bonds are not a great investment.
They're not.
As the U.S. dollar flops, that happens. I want to kind of echo and talk a little bit about that article because despite the fact that Dalio talks about the concern for crypto and pretty much I kind of wrapped it up when I made the stream document. I kind of said it's bright days ahead. However, that doesn't mean that we don't have questions in the future. And what he kind of says, I was reading chat, so I wasn't able to hear word for word every part of the article you read. But he talks about how the greatest enemy of Bitcoin could be its own success, meaning as it grows so quickly. And in reality, he's talking about all cryptos in general. At this point, affects all of them. As they grow so quickly, it scares the crap out of centralized governance. It scares the crap out of centralized banks. And it pushes them to create, similar to what they did back in the 30s, a ban on gold. It would push them to put a ban on crypto. Now, what he's also talking about as you keep going is, hey, just like gold, there was enough pressure that the government kind of backed off on that. But here's the thing. Ultimately, if you are scared of that happening, we probably can go ahead and, it's not ease your fears because it's actually confirming them. There will be crypto regulation. It's going to happen. The question is, what is your stance in doing it? Because ultimately, we have an opportunity as the people to stand firm on what we think is right for the future of currency. And eventually there is something the government will not be able to do and they will back off. They will adopt it and back their money with it. And I'm not just talking about the United States. I'm talking about all countries that actually need to listen to their people. They will end up backing their currency with it, and it will force the power to go back to the people and not in the centralized systems of the banks, centralized systems of the governments. So it's kind of like, hey, can you weather some storms? Because there's going to be some storms. But I promise you, if you weather them, the brightness on the other side is going to be amazing.
Yeah. So, guys, we have one more point we want to make, but first I want to mention one of the sponsors of this show. It is called Lux Algo. The link's in the description. And let me go ahead and show you what this is over on my chart. Guys, Lux Algo is an indicator pack that gives you signals over on Bitcoin that helps you to figure out where you might want to buy, where you might want to sell. Guys, there's so many functionalities of this that I can't go into a ton of detail in this video. If you type it into Google, you will find Lux Algo's page. It's right over here, and you can see more about it over here. Gives you ideas about institutional volume, gives you automated alerts and optimizations. There is so much that you can do here with Lux Algo, and as you can see on my screen here, it's actually given very good signals over the last several months on Bitcoin to sell and buy at certain places where you would make profit. All the colors mean something, all the outlines mean something, all the signals mean something. All of this information over here is very important, and it is an indicator pack that I'm personally using and experimenting with right now, and I think it's very useful. We've actually had a lot of people already go ahead and get it, and we're hearing good feedback from them. If you're interested in signing up for this, you can get 20% off with the link in the description box down below by using coupon code Jebb. It will potentially help you in your trading, and I think it is something that is worth your while. Guys, I have one more article that we want to talk about here before we move on, but even before I get to that, make sure to hit that like button, subscribe to the channel, and let's go ahead and do it. This is our last article, and then we have a couple things to go over, and we're going to wrap it out here. Number of Bitcoin holders shoots to record high, data shows. Investors with long-term horizons seem to be accumulating cheaper coins. You can see the article right here. Excuse me, not the article. You can see the actual chart right here for Glassnode. Glassnode is a fantastic website. I was looking at it for hash power or hash rate on Bitcoin a little while ago, but we have the graph right here. This is a relatively simple article, but it's something I wanted to bring to your attention. The number of Bitcoin addresses in accumulation has risen to a record high as investors with long-term horizons take advantage of the recent price drop to boost their coin stashes. The count of accumulation addresses climbed to a record for the 7th consecutive day on Monday, taking the total of 545,115 according to Glassnode data. The number has increased by 16,445 since May the 8th, a sign of persistent bargain hunting by long-term holders during Bitcoin's slide from $58,000 to $30,000. The balance held in accumulation addresses has jumped by 30,000 Bitcoin during the same time frame, now hitting a 2-month high of 2.79 million Bitcoin. These are called on-chain indicators, by the way. You can find them over here on Glassnode. It's a fantastic website. Glassnode defines accumulation addresses as ones that have at least 2 incoming non-dust, tiny amounts of Bitcoin, transfers, and never spent funds. Essentially, these are long-term holder addresses. Let's go to full screen and break this down for you because I want to wrap out the stream here with good news. Here's the good news. No matter what people think is going on with this whole mining council thing, which I don't think is a big threat to Bitcoin at all. I think it's overblown, but I wanted to make sure that you guys got that information and you understand what's going on. No matter what you think about the Bitcoin correction, the number of people buying and holding Bitcoin for the long run is increasing. That's what matters. Simply put, that's what matters. Bitcoin's price is a function of a supply and demand curve. What is the demand of Bitcoin? What is the supply of Bitcoin? Well, we know from the stock to flow ratio that the supply of Bitcoin, its increase is slowing down. Its supply is getting more limited as people lose Bitcoin and as the amount of Bitcoin injected into the space slows down. We know the demand is increasing because more people are buying and holding Bitcoin for the long run. We know the demand is increasing because we can see institutions that move very slowly starting to get into Bitcoin, and I think they're going to start getting into Bitcoin in an even bigger way over the next couple of months, even buying over the counter on these dips right now. Everything is pointing towards long-term price appreciation on Bitcoin, so I don't want you being concerned about the Bitcoin price right now, and I want to leave you with that here in today's stream. And by the way, guys, if you enjoyed today's stream, make sure to hit that like button, subscribe to the channel, and let's go ahead and read chat for a couple seconds, and then we're going to wrap it out. Tim, what you got for me?
While you read the chat, Jebb, I'm going to update you guys on what you need to know. The first thing is, every single Friday, we are going to now be having a newsletter that you can, if you were busy and you missed some stuff that happened throughout the week, you'll be able to read that newsletter, and it'll give you everything you need to know. So if that is something you're interested in, there is a link in the description below that you need to go and fill out a form. It's absolutely free. We're not going to track your information just to, utilize it. It's just we want to give you the information that you want. So make sure that you go get that if you are interested. The other news is that we are on TikTok now. Smay, what is our TikTok handle?
At CryptoJebb Official.
At CryptoJebb Official. All right, so if you want to see some hopefully entertaining segments, I think there's been some good ones up there already.
Yeah.
Make sure you go follow us on TikTok. We're going to explode over there.
Yep.
I think that's a really good space. The other thing is, did you see anything interesting in chat? I wanted to update the
Didn't see nothing, no.
Yeah,
I saw, well, I was going to say, I was trying to type a comment back, but it'd be better just to say it.
Okay.
So, what's his name? Let's see here. 35mm Scarface asked a really cool question. He said,
good name, too.
What is the blockchain's implication for filmmaking? And I was going to say, fun fact, real quick. Did you know that broadcasting and television is one of the first commercial uses of blockchain technology? So, I could see a lot, obviously, beyond just the financial component.
How's it been used in that industry? That's interesting.
That's actually how encoding works, like how streaming actually works. Is it uses blockchain technology? So fun fact.
Cool. Does it use blockchain technology or cryptography?
Tomato.
It uses cryptography.
Tomato. You know what I mean?
Cryptography's been around since the '60s, so yeah, that makes sense.
Yeah.
All right.
Cool.
It uses
Good deal.
blocks is what I meant. Yeah.
Oh,
Blockchain.
gotcha.
Yeah.
Oh, well, yeah, it uses
blockchain.
packets of information. I got you. Okay.
Yeah.
To update you guys real quick before we wrap out the stream, it's only Tuesday, so literally anyone could still win. Our predictions for Friday: Smay has $1 for Cardano, $1,900 for Ethereum, $30,000 for Bitcoin. So we're not sitting anywhere close to that. Doesn't look like we're heading there, but it's Tuesday. Again, if you've been in crypto even for the last 2 weeks, things can change really quickly. So can't count him out yet, although it's not looking necessarily that's where it's going. Jebb's looking pretty nice with his $1.35 prediction for Cardano, $2,600 for Ethereum, and $40,000 for Bitcoin. At the moment, he probably would be in the lead for all three of them. But again, it's just Tuesday. And if everything goes up, which I'm hoping, again, if that inverse head and shoulders pattern finishes, it looks like I'll be able to take the W in all three of them because I have $1.80 for Cardano, $2,800 for Ethereum, and $42,000 for Bitcoin. But make sure you tune in on Friday to see who actually wins, because at the end of the day, it doesn't really matter who's ahead on Tuesday.
Yep. So, guys, we're about to wrap out the stream. Before we go, I do want to mention one of the sponsors of this channel. It's called Bybit. The link is in the description box down below. It's a fantastic cryptocurrency trading platform, one that we personally recommend here. We actually just made a video going over the functionality and the user interface of it. If you guys want a great trading platform where leverage is enabled, you can sign up for Bybit with the link in the description box down below. And by the way, guys, leverage trading is dangerous. It is not for inexperienced traders. Leverage does not make you a better trader. Leverage only amplifies your current skill of trading. So if you're losing all your trades, it's only going to make you lose more. But if you're already a profitable trader, leverage might take you to that next step to get you moving in the direction that you want to be. There's a lot of risk involved, but it might be worth it if you find that interesting. Even if you decide not to use the leverage functionality over on Bybit, it's a great exchange, one that we think is worth your while. If you sign up with the link in the description box down below, not only will you be getting access to a fantastic exchange, you'll also be helping to support this channel. Guys, that's going to wrap it out for today's video. If you did enjoy today's video, hit the like button, subscribe to the channel. Stay tuned for more content. We have some fantastic, exciting announcements coming out relatively soon, and you're not going to want to miss them. I'm super excited. Follow us on social media at CryptoJebb over on Instagram and Twitter, and at CryptoJebbOfficial on TikTok now. But guys, that is going to do it for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.